Hi students, this is the second class of income from house property. Here I am going to recall the concept which I explained in the previous class. And today's class is related to classification of house property or types of house property. Before explaining the concept of classification of house property or types of house property, I am going to recall the concept which I have explained in the previous class. The income from house property means the income from house taxable here like rent means if any rent is received from a building or house property which is owned by the SSC, then it is considered as an income from house property. Means if any rental income is received by a person by an SSC, then it is considered as an income from house property. The property or building which has been given for a rent to other person, then there will be definitely income, and such incomes are considered under income from house property. Only income from house is covered here. Income from the building or the house property which has been given for a rent. And here a house means a building or the land appertinent to building, land attached to building. The building means house property which has been given for a rent to other persons, and plus land pertaining to building, attached to building like a parking area or garden areas. So these are considered as a land attached to building. They are also considered as a house properties. And if any income is received from letting out of any machineries or assets, any other assets except house, that is not considered under income from house property. And here there may be also involve of loss. You cannot specify that there is only income from house property. Even sometimes there is a possibility of getting losses in case of income from house property, and that will be covered from the income of the other house property. And only the income of house property comes whenever the house property is used for rent out purpose or residential purpose. If the house is used for own business or professional purpose, then it is not comes under income from house property. So that is a important point. If any property or if any building, if it is used for business purpose or professional purpose, that is not considered under income from house property. So that's the concept which I have explained in case of exceptions for income from house properties, which incomes are not considered as a income from house property. The first condition, SSC must be the owner of the house property. That is very important. The person must be the owner of the property. And the second one, it should not be used for business purpose or professional purpose. Then if it is used for business or professional purpose, then it is considered as a income from business or income from profession, not considered as income from house property. So that is in another chart you can see that income from house property, that is house property means building or land appertaining to building, like whatever I told in the beginning, the garden areas or parking areas of the house property or the building, they are all considered as a land appertinent or land attached to the building. They are all considered as a house property. And property which is used for business or profession, not considered as a income from house property. They are not considered as a house property, and is taxable to the owner only. Owner means legal owner and also the deemed owner. So it is assessable under the heads of the owner, SSC, the person who in whose name the property, house property, has been registered. The legal owner is the liable person to pay the tax. Means the tenant is not liable person to pay the tax. That's all the concept which I have explained in the previous class. So that's just a recall of the concept which I have explained in previous class. So today's class is related to the classification of house property or types of house property. Let's we start with the classification of house property or types of house property. There are mainly three divisions in case of classification of house property. three division of house property or three classification of house property: let out property, self-occupied property, and deemed let out property. Division in case of building, the division in case of house property. The first is a let out property, which comes under section 23 subsection 1 of the Income Tax Act 1961. A property which is given by the owner to the tenant for some consideration is treated as a let out property. In another way, the building or house property which has been given by the owner or assessee to other person to get some rent, to get some income, and such property is called as a let out property. The property or the house property which has been given for a rent to other person, then such property or such class of house property or building is considered as a let out property. Then second one is a self-occupied property, which comes under section 23 subsection 2A of the Income Tax Act 1961. A self-occupied property is one which is owned and used by you or your own residential purpose. Means the self-occupied property means the building or the property which has been used by the owner for their own residential purpose, then it is considered as a self-occupied property. The property in which you stay, the property which you use for your residential purpose, that is considered as a self-occupied property. A self-occupied house property is used for one's own residential purpose. This may be occupied by the taxpayer's family, either parents or spouse or children. So they can also use it either by the assessee itself or by the family members. Family members are either parents or spouse or children. They can use it for their residential purpose. If they are used for a residential purpose, then it is considered as a self-occupied property. So first condition is it must be used for residential purpose. Then only such properties are considered as a self-occupied property. So that is the second division. So after budget 2019, an assessee can own two houses as self-occupied houses, and more than two houses will be considered as a deemed let out property. So before 2019, as per the act, the assessee can be utilized only one house as a self-residential house or self-occupied property. But after 2019, amendment has been made. Then now the assessee can use two houses as a self-occupied houses, and if there is a more than two houses used by the assessee for residential houses, only two houses which have the highest expected rental value will be considered as a self-occupied property, and other houses will be considered as a deemed let out property. So that is the second division, self-occupied property. So one point you have to remember, the assessee can use up to two houses for residential purpose, so such houses can be treated as a self-occupied property. If assessee is using more than two houses for residential purpose or as a residential house, then for the assessment purpose only two houses considered as a self-occupied property. And which one to be considered as self-occupied? The property which gets the highest expected rental value to be considered as a self-occupied property, and remaining houses considered as a let out property. That's called as a deemed let out property. Deemed let out property means practically assessee is using it for residential purpose, but for the assessment purpose it is considered as a let out property. So therefore it is called as a deemed let out property. So that is about this let out property and self-occupied property. And the next division of house property is a deemed let out property. The third division of house property is a deemed let out property or deemed to be let out property. Section 23 subsection 4 of the Income Tax Act 1961. Deemed let out means when a taxpayer owns more than two house properties, the law mandates that only two. Prior to budget 2019, it was only one property. So now it is applicable to amendment has been made. So the law mandates that only two such properties can be treated as a self-occupied, while the third one, irrespective of whether it's let out or not, will be deemed to be let out property. So, I will repeat it again. What is deemed let out? When a taxpayer owns more than two house properties, the law mandates that only two such properties can be treated as a self-occupied, while the third one will be deemed to be let out. For example, if you have 4 houses and 4 the house properties are used for your own residential purpose, but at the time of assessment of tax, only 2 houses considered as a residential house considered as a self-occupied property and remaining 2 houses considered as a let out property, and the property which are considered as let out property as per the Income Tax Act, they are called as a deemed let out properties. And now the question comes, which one to be considered as a deemed let out and which one as a self-occupied property. And you have to find out the expected rental value of all the property which are used for residential purpose, and the properties which gets highest expected rental value, first 2 houses as considered as a self-occupied property and remaining houses considered as a deemed let out property. So that is about the meaning of deemed let out property. So this is a chart of classification of house property or types of house property. The first one is a self-occupied, then let out property and deemed let out property. The self-occupied means self-occupied throughout the year, the residential purpose, partly vacant and partly self-occupied. If any building is partly vacant and partly self-occupied, then it is considered as a self-occupied property. Unoccupied throughout the year means unoccupied throughout the year means either it is not used for residential purpose and not used as a let out property, then it is considered as unoccupied. It's not occupied by any person, so then it is also considered as self-occupied property. The property throughout the year used for residential purpose and partly vacant and partly self-occupied during the year, so it is considered as a self-occupied, and unoccupied throughout the year is considered as a self-occupied. And then another is a let out throughout the year and part of the year let out and partly vacant, part of the year is used as a let out and partly vacant, so then it is considered as a let out property. Means if any property used in a year as part of the year used as a let out and part of the year used as a vacant property, then it is considered as a let out property only throughout the year. And part of the year self-occupied and partly let out. It is another case. If any house property or if any building, if it is part of the year is used as a self-occupied residential purpose and remaining part of the year used as a let out property, then it is considered as a let out property only. See, in case of self-occupied also there is a partly vacant and partly self-occupied. This is part of the house, part of the building vacant and part of the building self-occupied. There it is used as a self-occupied, and here it is specified part of the year self-occupied and part of the year let out, so then it is considered as a let out property. Part of the year let out and part of the year vacant, then also it is considered as a let out. So part of the year used as a let out and part of the year is used as a self-occupied, then it is considered as a let out property. Part of the year used as a let out and part of the year used as a vacant, then also it is considered as a let out property. If the part of the house is used as a let out and part of the house used as a self-occupied, then it is calculated as per part of the house is considered as a let out and part of the house is considered as a self-occupied. If the part of the house is vacant and part of the house is a self-occupied, then it is considered as a self-occupied property. And another division in let out, the part of the year self-occupied and partly let out and partly vacant. Again, it is also considered as a let out property. Means part of the year used as a self-occupied and remaining part used as a let out and another part of the year used as a vacant. So then it is considered as a let out property. For 3 months used as residential house and remaining 3 months used as a let out and remaining 6 months it was vacant, then the property is considered as a let out property. And next one is a deemed to be let out. As like I told earlier in the meaning, deemed let out property means the where the SEC used more than 2 houses for residential purpose, then as per the Income Tax Act only 2 houses can be used as a self-occupied property, then the remaining house to be considered as a let out property. So that is about the classification of house property. So let out, self-occupied, let out and deemed let out properties. For practical purpose, the provisions of let out and deemed let out property are one and the same, and self-occupied properties carry separate provisions for the calculation.